Hi, Warren William here from Smartest Data. So do you remember in the film Moneyball, down in the car park? So let's take a look.
Go on.
Okay, people who run ball clubs, they think in terms of buying players. Your goal shouldn't be to buy players, your goal should be to buy wins. And in order to buy wins, you need to buy runs.
People who manage equity portfolios think in terms of buying companies. This could lead them to misjudge the companies they invest in. They should instead be thinking of buying earnings, EPS, earnings per share, or wins. And in order to buy earnings, you have to buy sales or sales per share. Okay, so what am I trying to say? You have to be focused on what you're paying for the runs or sales and the wins or earnings when you're investing in equities. This means focusing on the valuations to be driven by data. Of course, the analogy is not so simple. There are other factors that come into play: risk management, diversification, circle of competence. So of course there are differences, but also many similarities. Do you want to have greater control over your equity investments? In this video, I will cover 5 key points in preparing to invest in equities. So let's try to level the playing field. Let's go to the video. In the video, I'm going to cover 5 key points you need to understand and why it's so important to crunch the numbers, understand the numbers. So the 5 key points that we're going to cover today is, first off, command over the data, understanding equity valuations, mispricing assets in the long game, establish your circle of competence, and of course, do your own due diligence and research. Let's go to point number 1. So command over the data. To be a successful investor, you must develop your skill base. You have to invest in yourself, and the key to this is having command over the avalanche of stock market data produced on a daily basis. During our lives, the investment decisions we make matter. They matter a lot, whether the investments in equities, bonds, or real estate. In making these decisions, the information is never really produces a clear black or white result. Instead, we often have to determine what shades of grey we prefer. We have to hedge our bets. It's a numbers game, and a successful investor in the equity markets, you have to have command over the data and be driven by the data. Not difficult, but it takes discipline. The formula for successful investing in equities is straightforward. It starts with understanding the data. So the 3 databases or data apps that I use are Bar Chart, Atom Finance, and FinScreener. I'm not going to rank them, they're all excellent. But what I will say, I'm part of the Bar Chart affiliate program. So if you want to subscribe, take a look at the link below. So let's take a look at all 3. 3 main platforms that I use: Bar Chart, Atom Finance, and FinScreener. So let's go through them one by one. Over to Bar Chart. So this is the main page of Bar Chart, as you can see here. So Bar Chart Premium, and you can see it gives you a background of the stock market, how the indexes are moving. Then we move on to a particular stock. So Apple, for example, in this case, I've got the Bollinger Bands, MACD, RSI, and stochastic analysis. What we can do is pull this out, and we can bring that up to take a closer look. Moving on, we can go to new stock recommendations, and this is what I use just to get a general indication of what's going on in the market. So what I do here is just look at the number of stocks. So 391 stocks are giving a buy signal, and 100% signal is 228. So the buys are winning against the sells. Gives you an indication of market trends. Then we go on to, say, NASDAQ price volume leaders, for example. Okay, so what I've just done here is just brought up the NASDAQ as an example, and what I've done here is to search by weighted alpha. So that's the amount that the stock has outperformed the index weighted to the most recent recording. So what you can do is take a look at the list here, and then what you can do is take it out into flip charts. This is really interesting. And then just flip across. We've got those studies which I discussed before, the Bollinger Bands, MACD, RSI, and stochastic, and just move across the various stocks. Then background to the US economy, so we get a quick overview of where treasury yields are going, mortgage rates are going, and house pricing by region, whatever you want to have a look at. And then this is interesting, going over the industry sector. So we get a heat map by industry, and here we can see steel producers have started to go really well. So let's take a look at the steel producers. So what's moving in the steel sector? Let's have a look at the beta, for example, of moving that over to the beta. So United States Steel. So then we go over to the flip charts and take a look at where we are regarding United States Steel. Well, there's a bit of momentum behind the stock. This is a way to screen and have a look at where you're heading. Okay. And then finally, back to Apple, you can sort of see just doing another study here. Here we are with the MACD against the S&P 500. And then finally, bar chart is fantastic for education. So here's the range of all the different studies that you could use. I suggest you stick to a couple. I do Bollinger Bands, MACD, RSI, and Stochastic. So let's have a quick look at the Bollinger Bands. What they bring up is they bring up definitions, how to use it, and how to calculate it. Look, bar chart is a very, very formidable tool. It's around about $150, I think, for the year. I'm a part of their affiliate program, so if you do want to sort of move over and take a look at bar chart, by all means, link below. I will get a little bit of a commission from it, but it helps the channel. Okay, so on to Atom Finance. This is one of the other tools I use, and you can see here we are on the home page here. Okay, so let's take a closer look. You can see what stocks year to date, how they've performed. You can move this back, for example, the year performance. There you go, whatever you want to have a look at. Then moving on to a document search. So Netflix came out with its results last week. So what I do is just put in the earnings, Netflix, and it brings up some of the articles. You can select the articles here. Then finally, also moving on to the screening page. So what I've done here is looking for the large cap US banks. So I put in the United States, banking and investment services, over 100 billion in market cap. I want a 5-day performance under 5% just to see what's going on. Also the PE, 2-year forward PE, going out under 10 times, a yield which is above 2%, and a price to book under 1.4. So this brings up 5 banks. Okay, the key American ones are Bank of America, Goldman Sachs, and Wells Fargo, and then 2 Canadian, Royal Bank of Canada with their shares listed in New York, and also Toronto Dominion Bank. So that's how I use Atom Finance. It's a great tool. Take a look. Okay, so on to the last one, FinScreener, which is a great tool also, which I use. So here we are in the main page here. So it opens out at my desk. And how do we go through this? So earnings calendar, which is key. Earnings reports coming up this week. Top gainers, top losers. Got that on the NASDAQ. That can be changed to the S&P 500. Onto the heat map. Best dividend stocks, overbought, oversold stocks. So if we click on the top gainers for the NASDAQ, you can see here it brings up the top gainers for the NASDAQ. Okay, moving on. So you can see I've also put my portfolios in here, so that this is the top 10 stock picks, which is the CMB segment run the early part of this year. So you can see we put that in there, and so far the performance has done quite well. It's up around 6%. We can go down and have a look at the key movers in here. So you can see Nvidia, Amazon, Qualcomm, Google, Wells Fargo, Apple. Exxon has been the main performance for the year. The laggards are Bank of America, Raytheon, and also Verizon. Okay, the last one. Okay, so moving on also to the heat map, you can see Apple. You can drill down there and take a look at how the stock's actually performing. Microsoft, and then also Amazon. This can also, if we go over to the maps, we can just do a straight heat map. And here we are the various sectors, so technology, healthcare, communication services. So that's FinScreener, also a great little tool. Take a look. On to point number 2, understanding equity valuations and techniques. In these videos, there will be concepts that you are not familiar with, but that's not to say that equity valuations is rocket science. Valuing equities is relatively straightforward. There are 3 main concepts in equity valuations. Intrinsic value, so typically a discounted cash flow, giving the present value of future cash flows, or it could be a dividend discount model. Relative valuation, so comparing the various ratios, price ratios such as the PE ratio, price to sales, and the multiples applied against sectors or index, comparable stocks, or against the same stock itself going back over the last 10 years. Then finally, event driven. If this event happens, then the stock valuation should become X. Please, equity valuations is not a perfect science. If you get 55 to 60% correct, we are making good money. The claims of 80% plus are not sustainable. Point number 3, mispriced assets and the long game. It's true that the above valuation techniques assume that the equity markets misprice assets. Of course, this can occur and does occur, in particular in the less researched corners of the equity markets. For example, in small cap stocks or in minor industrial sectors. Also keep in mind, if this does happen, the equity markets can misprice assets for a long time. So you may be right, but you have to deal with the uncertainty. Dealing with these situations, an important part of preparing for yourself to be a successful investor. Remember, to beat the market, you must be ahead of the market. This takes a lot of practice and discipline as an investor. You'll have to have convictions as to the valuations you have assigned to your investments. But these convictions should be questions. New information arises. Your convictions should not be unbreakable. The equity markets do evolve. So on to point number 4, establish your circle of competence. Now that you've got command over the data, understand where to look within your circle of competence and stay within these boundaries, and over time, by all means, expand these boundaries by looking for new equities to cover. In short, understand the stock that you would like to own, or why you continue to own a stock, and when you need to adjust. Or in other words, sell. In some ways in investing, the second most difficult decision appears to be when to buy a stock, and the most difficult decision appears to be when to sell a stock. Investors can become emotionally attached to their equity investments. The whole investment process is geared to giving positive investment themes. As an investor, you must become somewhat cynical, or am I just trying to say you have to think in question constantly? So how to define what your circle of competence is and how to determine its characteristics? This comes down to how you define your skill base in coming into investments. It could be the industry that you're currently working in, your education, your interests. Are you an analytical type of person? Anyway, my advice to you at the beginning is to work to your strengths. Stay within these boundaries. Point number 5, due diligence and research. Having access to research and data is critical. If you don't have access to research and data, you're frankly guessing and picking up the next quick story. I use Bar Chart, Atom Finance and Fringe Screener for my data, and for written research I use Seeking Alpha and any number of emails which come across from Bloomberg, etc. So it's easy to become overwhelmed when we look at the data. Making the commitment to equity research means practice. It's important to keep following the stock markets, the media, CNBC for example. The videos like these, and frankly, it will all become a whole lot easier. Wherever you get your research, make sure it's reliable. Do not overcomplicate things. The stock market valuations are both the index sector level and also the individual stock level, making it so simple to do compare and contrast type valuations. It must be robust. The services I mentioned before are adequate for independent investors and reliable. If you're looking at general research, always understand who is paying and writing the research. So in closing, I'm not offering trading services. I will in due course do education videos. That's a natural progress for what I'm doing. I will not rely on gossip or speculation. Yes, of course, I will listen to the news. The videos are to give you indications or direction as to where to look. So no buy, hold, sell recommendations. My goal is to give you independence in making your investment decisions as an equity investor. Remember, I'm not your investment advisor, but anyway, learn, like, subscribe, stay committed to the videos. It's a journey. See you in the next video.